oil prices and the dollar remain under pressure as politicians in Washington show no signs of progress over the U.S. budget standoff. Now, while some say this could affect the U.S. internationally, we'll look at how this could also impact the West African markets. Joining me now in the studio is Bismarck Rewane. He's an economist and CEO at Financial Derivatives. Thank you so much, Bismarck, for joining us.
Good morning.
As usual. Yeah. We're looking at 800,000 U.S. workers still at home a few days into the budget impasse. Doesn't look like there's any solution or any compromise in sight. Now, let's talk about how this is affecting the U.S. internationally.
Well, the cost to the U.S. is $10 billion a day. $10 billion is nothing compared to the size of the U.S. economy. But symbolically, the fact that if nothing is done and we get to October 17 and the debt ceiling is not fixed, then the U.S. will default. If the U.S., which is the largest economy in the world and holds about 90% of external reserves of all the countries, defaults, you can imagine the impact of that on many countries and the world economy. Is it going to happen? No, it's not going to happen.
No, I was just going to say that because many analysts say, yes, it's 10 days to that deadline, but...
No, but it's not going to happen. They're just going through the motions. The reality is that, and that's why, one shouldn't fall for the hype. Politicians go through the process to show that democracy works and that consensus is always reached at the end of the day. And it's also an example to other countries that you can work out solutions to problems, no matter how intractable they may be. So, in reality, impact on the U.S. economy is not that much. The impact on the rest of the world, not that much. It only increases anxiety. But the markets themselves are discounted this, knowing very well that there will be a solution at the end.
So nobody's leaving the chance for a likely surprise, because when one listens to comments, especially from Mr. John Boehner, who says he wants to have a conversation with Democrats for the Democrats to tell the Republicans where this debt is coming from.
They're going to cut spending.
So no, those are sometimes some of the statements sound scary, and also point to the fact that there could be. Nobody saw the downgrade last year from AAA to AA+.
No, you see, it's happening at a critical time. The World Bank meetings start on the 11th, I think, in about 2-3 days' time. The IMF has issued a statement. But the reality is that the Republicans say we'll negotiate anything except the affordable health care program.
The Obamacare.
Obamacare. Now, the Democrats say, no, we won't negotiate anything, and Obamacare is not. So we're going to come through this process. In the end, just like under the Clinton administration, they'll come to some kind of compromise. So I wouldn't worry so much. What is happening is that if it is resolved, and Syria and Iran is resolved, we see pressure on the oil price. That is where it begins to affect countries like Nigeria.
Yeah, talking about oil prices, we're looking at Brent this morning down 33 cents, still hovering at around 109, but energy analysts say they don't see it falling below 107 and not going above 112 or so.
No, I don't. I think it will go down to about 105, 104. Oh, really? Why do I say this? Because Iran is in an accommodative mood. Syria, there's going to be some solution. Iraq is going to start producing. Libya, there's production coming up. So long shot is that you're going to see oil prices go down, but not below 104, 105 this year. But next year, then we're going to see the pressure come on. And that could affect the revenue profile of Angola, Nigeria, Ghana, and the other oil producers.
Now, I was just going to say that, obviously, usually we'd see oil prices rising, and of course, that would be good for Nigeria. But then, of course, we're looking at the domestic issues at home, pipeline vandalism, oil theft, and all of that. But then again, let's focus on the markets. As a fund manager, I'm looking at fund managers in the US who are watching this, happenings on Capitol Hill very closely. What will be their thinking now in terms of capital flow? How do we rebalance our portfolios? Although, I
think it's short term. The fund managers are in for the long term. They know that there'll be a resolution, so they're not going to move in any direction.
What about the fund managers who are playing in our equities markets?
Yes, no, the fund managers who have emerging market exposure are going to be saying that, okay, if the US is in difficulty, then it's time to rebalance your portfolios in favor of emerging market portfolios. But emerging markets have come under a lot of heat. If anything, people are trying to take money out of emerging markets right now. So I don't see that this is not a let up for the emerging market. Emerging markets facing commodity challenges, facing currency challenges, and facing policy challenges all at the same time.
Now, what do you think is looking at this budget impasse, this budget battle? I mean, we've come a long way looking at the US, and we've seen some parts of it in Europe. What lessons can our own politicians learn?
Well, democracy is about consensus and about agreements. It's about negotiation. And failure to negotiate to become intransigent doesn't help anybody. The markets will punish you if you don't negotiate the markets will discount you, the rating agencies will discount you. So it's a question of a learning process. But don't forget, some of these democracies are 300 years old, while some of the democracies in Africa are only about maybe 20, 30 years old. And therefore, the lesson is that you need to negotiate, you need to have a consensus position, and you need to learn how to give and take. The winner-take-all days are way, way over. That was under the military governments. All
right, thank you so much, Bismarck. We're going to have to leave it there. It's a developing story, and we'll be tracking it, and perhaps we'll get you in. If they do not default come October the 17th.
There will be no default.
There will be no default. Sure. Okay, we'll keep our fingers crossed on that. Thank you so much for sharing your own perspective. That was Bismarck Rewane, an economist and CEO of Financial Derivatives.